This video is sponsored by the trading brokerage Moomoo. Use my link down below, deposit $100 with Moomoo, and we each get 5 stocks, and each of those stocks, get this guys, is valued up to $3,500. So get your free money from Moomoo, link down below, and let's get right into the video. What a red day in the stock market, ladies and gentlemen. It was not a pretty day out there. SPY ended up closing down 1.8%. We had the Russell down 1.5%, the NASDAQ down 2.3% as the Dow went down 1.5%, and the VIX closed up about 20% on the day. So today we got to break down some stocks, some earnings, my thoughts on the market. So hit the like button, subscribe, make sure to join my Patreon, link down below if you guys want my buys, sells, call outs, morning update videos, plus more. And now let's get right into the video. So take a look. We all know the CPI data came out this morning. We got about 7.5% inflation annualized based on the January number. And well, inflation's at a 40-year high, guys. Yet again, we are at a decade level, multi-decade level high of inflation right now. And it doesn't seem like it's slowing down. Quite honestly, it does not seem like it's slowing down. And I'm not surprised. We've talked about this on the YouTube channel, not just for the past couple of weeks, but for the past couple of months. We've been talking about inflation, and I've personally said my stance is that inflation was not transitory when the Fed was saying it was transitory. I was very adamant at that point in time that it was not transitory, and I'm still sticking to, obviously it's not transitory, but I'm still sticking to the fact that we probably will see heightened inflation for the foreseeable future, at least over the next couple of months. And hopefully as supply chain problems resolve, maybe we see a little bit of a decrease in this inflation, but in the time for the time being, we are going to be seeing a lot of inflation, and the data backs that up. Make sure to go check out my video from this morning if you guys want to see a more detailed breakdown of the inflation number and, of course, the different categories, how it's looking for food, energy, used cars, new vehicles, all that good stuff we covered in my video from this morning. So look at this, guys. A lot of volatility in the markets today. Obviously, the VIX was up about 20%. We obviously had a lot of volatility. We dumped this morning after the CPI number came out. We saw a rally at market open, right? So dump pre-market, rally at market open, and then we ended up selling off for the rest of the day. You guys can see the intraday move that SPY saw was about 10 points, $10, right, from 457 this morning, and we ended up going all the way down to 447. So from top to bottom, this thing dropped about 2.2% intraday, and Triple Q dropped even more, I'm assuming. Let's take a look here. From about 366 to 356, yup, it dropped 2.7%, even more than what SPY did. And let's see what the Russell did, the small caps index here. This actually traded a bit different. We saw a drop right at open. This rallied all throughout the day, pretty much until 1 p.m. on the East Coast, and then it started to get hit, and it dropped about 3.1% from 2100 down to about 2039. Again, it dropped about 3.1%. And when it comes to the Dow, usually the least volatile of the bunch, this went from about 35.8 this morning to about 35.1. That was the low point of the day. It dropped a little bit under 2% intraday from top to bottom. And like I've been saying this a lot on the YouTube channel, the 4-hour SMA, or rather the 4-hour 180 SMA on SPY and Triple Q seems like, that's a big level of resistance, and this could be a point where we do get more selling. Look at this. The proof's in the pudding, guys. The technicals do not lie. Look at this. Clear resistance at the 180 SMA, which we struggled at about a week ago, and all throughout this sell-off since the beginning of 2022. So we got rejected there again today, right by the 180 SMA, and this is also looking like a double top. Look at SPY. This looks like a double top. We have the one top at about 458, the next top at about 457, 458 from today, and now we're dumping under both moving averages, and we ended up dumping under the 50 moving average, and we closed under it at close today. That's not a good sign for the bulls whatsoever. It seems like in the short term here, the rally that we saw ended up being a bull trap, and the bears are gaining momentum, right? The bears are gaining momentum. And I'm not going to be changing my mind on that until the technicals prove me otherwise, which as of now, they are not doing that. The technicals are clearly in the favor of the bulls. On SPY, Triple Q, pretty much all of these indexes, I'm seeing the same thing. So be careful, guys. Be careful. That's all I'm saying. If you think volatility is going to die off now, probably not. And mind you, March is right around the corner. What are we getting in March? We're getting tapering completely. Tapering is going to end completely, or we're going to be fully tapered by March, according to the Fed, right? They're going to stop all of these asset purchases. And B, we are getting our first rate hike. So if you think volatility is going to die down before that, you're sadly mistaken. So strap up, get ready, buckle up, because this month, the rest of this month heading into March, it's likely going to be volatile. It's going to remain volatile. So be ready for that, guys. And of course, let me know your thoughts down below in the comments. Hit the like button, subscribe. Don't forget to get your free money from Moomoo, 5 stocks from Moomoo, link down below with a $100 deposit. And now let's talk about some stocks, earnings, what I'm looking at in terms of these different stocks. So number one is Affirm, and you guys know, for the most part, during earnings season, I like looking at earnings in real time with you guys. So let's do that now. Affirm, ticker symbol AFRM. You guys know this company. It went down, holy crap, I just realized, it went down 21% on the day. Are you serious? What the heck? So this thing sold off into earnings. Wait, what? They reported during the day? Is this something new? I mean, I haven't seen this. I don't even think I've ever seen this before. But it looks like Affirm reported earnings during the day today, and the stock went down 21%. So I was looking at this initially. I'm like, the stock closed 21% heading into earnings after hours, but then again, I looked at it and they reported at about 2:45, 3 p.m. on the East Coast. Maybe it was planned for them to report during the day. I've never really seen that before, but yeah. They reported intraday. The stock was at $80, $83 before they reported earnings, and then it went all the way down to $50, guys. This thing dropped 40% intraday. Come on, are you serious? $83 to $50. That's a 40% drop intraday. And let's see here what they ended up doing, guys. What the heck? I've never even seen this before. Negative 57 cents of EPS versus negative 34 cents estimated. So that beat. And we got revenue, or actually, no, that missed. They clearly missed EPS. And we got revenue that beat. Revenue beat. $361 million versus $328.8 million estimated. And it looks like they see Q3 sales of around $325 to $335 million versus $330 million estimated. So pretty much right in line with the estimates. And full year 22 sales of $1.29 to $1.31 billion versus $1.28 billion estimated. So guidance is all right. It's pretty much right in line, a little bit above, the estimate for full year 22 sales. They missed EPS by a long shot, but they beat revenue. I'm not exactly sure why this stock is cratering right now. We have to look through this a little bit more. Let's see. I'm not really seeing anything here, but I'm going to have to probably look at this more after market hours. Let's see here. Earnings release shows revenue. It says revenue miss here, but clearly, unless that was a typo, they beat revenue. So this is interesting, guys. Affirm is getting massacred right now. It's down. It's actually down from where it closed. It closed at $58.68 at close. Now it's at $57, barely holding above 57. So this one is down big time today. Clearly got rejected now that we're dumping. We clearly got rejected by the 180 moving average on the 4-hour chart. And honestly, by the price action, I would not be surprised if this took out the lows from about 2-3 weeks ago, from the end of January, those lows being around $48. I would not be surprised by the looks of it if this ended up selling off even more, and again, maybe we take out that $48 low. So from a technical perspective, I would not even touch this stock with not even a 10-foot pole. a freaking a 200-foot pole. I would not touch the stock. There is no way. There's no way until it starts breaking out of, let's say, 85, 90 bucks, which at this point, we are a long ways away from that. So Affirm, not looking good. And this was never a stock that I was too, into anyway. I mean, I never thought about buying Affirm. Maybe I thought about trading it here or there. But, based on those results, the price action, I'm glad I don't own it. And I'm not trying to knock any of you guys that own it, but it's looking rough. It's looking rough. Let's just put it like that. So the next one here is Dexcom. We talked about this recently. This one is not as volatile, not nearly as volatile as Affirm after hours, but it's still down a bit. Still down from $442 where it closed. Now it's sitting at $429. We are holding above the 50 moving average, which is a good sign in the very short term. But the second we break under that, that's obviously not going to be a good sign for the bulls. Bulls need to hold above 420. Right now we're at 429. So keep an eye on that. The 420, 425 level for Dexcom. Let's see what they reported. Let's pop it up. They did 68 cents of EPS versus 85 cents estimated. So they missed EPS by, actually, I was going to say a little bit. They missed by a lot. 17-cent miss on EPS, and sales barely beat, but they did beat. They did $698.2 million versus $695.63 million estimated. So they beat sales. They missed EPS by a long shot, and they see full year 22 revenue of $2.82 to $2.94 billion versus $2.96 billion estimated. So that's not a good sign. They guided down on full year 22 revenue. So that's why the stock is taking a haircut. Not as bad as Affirm, not nearly as bad as Affirm, but it is taking a haircut on missed EPS and the lower guidance than expected. So I wouldn't be surprised if this were to continue this downtrend it's been on, quite honestly, from that report. And again, watch 420. If bulls bounce above that point, maybe there's hope for them. But the second we break under 420, I'm telling you guys, this might take the lows out from the end of January, being anywhere from 380 to 385. So be careful with Dexcom. Upwork, let's pop that up. UPWK. Let's see how this one's doing. They closed down 2.5% on the day. And based off what I'm seeing here, it looks like they hit a low of $20. Are you serious? Oh my goodness. It closed at $28. They reported earnings. It shot to 30, and then it shot down to 20. Now it's hovering at about 26. So super, super volatile stock here. Let's see what they did. They ended up doing negative 5 cents EPS, which is in line with the estimate, so not bad. And they did about $136.9 million versus $131.77 million. So they beat sales, they came in line with EPS, and they see Q1 sales of $139 to $141 million versus $139 estimated. So that's pretty much right in line with the estimate for sales for Q1. Let's see here. Full year 22 sales are $620 to $630 million versus $620 million. So a little bit above guidance for full year 22 sales rather. So not too bad there. And this might be why the stock's taking a haircut. They see full year adjusted EPS of negative 11 to negative 8 cents. So in other words, they're expecting to lose money in 22, right? Versus the 21-cent profit that analysts were expecting. That is not good, guys. That is not good whatsoever. And that's probably why, you can see it here, the headline. That is why the stock is selling off, due to that poor EPS guidance for 2022. So this stock, guys, has been getting destroyed from $64 back in July. Now it just hit $20 in the after hours. We are talking a drop of 70%. And this is one of those stocks that did very well throughout the pandemic as everybody was working from home for the most part, right? This company, it thrived due to all the people you could hire on Upwork. Fiverr is another big one. Fiverr is a competitor to Upwork. So it looks like, look at this. Look at this head and shoulders, guys. This head and shoulders is playing out beautifully. I mean, if you shorted this stock back in November, December, heck, even last week, you are doing beautifully well right now. And I didn't short it, I'll be honest. I didn't short it, but I know one of you guys had to have. And if you did, kudos to you, because this is a textbook head and shoulders. Look at that. Left shoulder, head, right shoulder. It's playing out beautifully. And the truth is, it might have more downside. This might go to the teens. Who knows? It might be an $18 stock, $19 stock, $15. That's where the right shoulder could complete. Anywhere from $15, $16, $18. That's where it could be going. So watch out for Upwork, UPWK. Eli's another one, Callaway Golf, for all my golf people out there. I used to play golf a little bit, I'll be honest. I freaking suck at golf, but that's neither here nor there, right, guys? And the stock here, Eli's the ticker, right? It went down from $37 back in June, and it just hit $21 recently, so it's down 40% pretty much over the past couple of months. Serious bear market for Callaway Golf. Let's see what they ended up doing with earnings, as they did report after market hours today. So give me a second, guys. Let's see this. They did negative 19 cents EPS versus negative 28, so that beat. Sales came in at $711.72 million versus $702.02. So double beat for Callaway. They beat EPS, beat revenue, and they see full year. Wow, that's pretty good, actually. Wait, is that a typo? Full year 22 revenue. That's got to be a typo. It says $3.78 billion to $3.13 billion. That's got to be a typo. Versus the $3.12 billion estimated. I'm not sure. Yeah, that's weird. Let's see what this says here. They issued the guidance, yada, yada, yada. Let's see here. Here it says 3.78 to 3.82 billion is their expectation. So that might be it. 3.78 to 3.82. Maybe that's versus the 3.12 estimate. So maybe sales guidance is a lot higher than the estimate. But the stock's really not doing much. If we pull up the intraday chart, the stock is actually moving a little bit in the red direction here. It was above $26 earlier today, and now it's at about $25.30. So it's down a bit from the intraday high. And overall, if you guys take a look on this 4-hour chart, Callaway Golf is well within the downtrend still. So I wouldn't even touch this thing until it started to reverse, maybe out of, let's say, $28, $30. I think that's where the real reversal will occur. And as of now, we're in the mid-20s. We're nowhere near reversing. So I'm going to be very, very cautious with this particular stock. Pepsi and Coke also reported this morning. Let's break those down quickly, guys. Pepsi is getting destroyed. And for Pepsi to be destroyed, a 2% red day, I guess you can say, that constitutes as Pepsi getting destroyed. I mean, it's a blue chip stock. Well, I don't want to say it's destroyed as it's down 2%. That's kind of that's a bit over dramatic, but it's taking a beating. 2% in either direction for a stock like Pepsi in one day. That's a decent sized move. So it's moving down 2%. It's well under the moving averages now on the 4-hour chart. We're noticing a head and shoulders kind of on this stock as well, right? Left shoulder there, head right here, and then we got the right shoulder. So this might end up going lower. Excuse me, based on what I'm personally seeing right now. This might, especially if it takes out the lows from about 2 weeks ago at about 166, 167. This could go low 160s, guys, based on what the charts are looking like right now. And they ended up doing, let's see here, looks like they did core EPS of $1.53 versus $1.52 estimated. And when it comes to revenue, they did 25.25 billion versus 24.24 billion estimated. So they beat revenue, that's nice, and they barely beat EPS. That's also decent, I guess. And that's compared, look at this, guys, 22.6 or 22.46 billion from a year ago. So they're still growing year over year, but the stock, it might have got ahead of itself. Let's be honest, guys. This thing has rallied from about 144 to 177. That's a 22% rally in the past couple of months. It got a bit ahead of itself. It's not a growth beast like some other growth companies. It's a more mature company. So, with all this good news most likely baked in, the stock's up 20%. It's going to take a huge grand slam earnings for Pepsi to continue trucking along, and they just didn't get that. and the stock's being punished for it. It's not that bad. I mean, in the grand scheme of things, it's still uptrending, but it's selling off. It's down 2% on the day. Coca-Cola, KO, this one went up on the day, 0.6% up on the day, and this one is actually above both moving averages. So technically speaking, out of the two giants, Coke and Pepsi, Coke's chart looks better. Coke's chart just straight up looks better, guys. So let's see what they did. Live news tab. Let's go down a bit. Let's see what they did. 45 cents versus 41 cents estimated. 9.5 billion in revenue versus 8.96 billion. So double beat for Coca-Cola. Not too bad. Let's see if they issued guidance. I'm not seeing anything here on guidance. Okay. And again, like I said, Pepsi under the moving averages. Coca-Cola is above the moving averages. That's a very good sign if you want to go long Coca-Cola, from a trading perspective. And it's actually down about $1.50 from the highs from earlier today. It hit almost $63. We closed at 61.40 roughly. So this could be a little dip buy. If you guys are scalping, if you guys are day trading, watch for a pop. Watch for a pop in Coca-Cola here. This might end up going a bit higher from here. So overall, guys, that's pretty much it. Today was a bloodbath. I literally only had 3 stocks that were green on my watch list. I mean, Snapchat was green, Airbnb, and LH, which is Laboratory. What's that one called? Laboratory. I forget. Laboratory Corp. That's right. Those 3 are the only 3 that were green in my watch list, and the most red one on my watch list was AMD, followed by Coinbase. So just be careful, guys. Be careful. If you think this volatility is over, you are sadly mistaken. It might just be getting started. I mean, it's been here for a while. It's not just getting started, but it's probably going to be heightened volatility until we get that March Fed meeting, which is probably going to be the most anticipated Fed meeting over the past year or two. I mean, this is it. This is going to be big stuff. So be ready. Hope you guys enjoyed the video. Hit the like button, subscribe, drop me a comment, let me know your thoughts, and join my Patreon if you guys want all my buys, sells, call-outs, all that good stuff, morning videos, more access to me, Discord. All of that is linked down below on Patreon, and you guys could also get your 5 stocks from Moomoo. Use my link down below, deposit $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. So get your free money from Moomoo, link down below. I'll catch you guys in the next video. Peace out.